How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for May 22nd, 2018. Here is a snapshot of the positions held by the institutions at that time. And so let's get into it. Here is gold. So we had a drop in price, and we also see that longs were closed out from 201 to 189, becoming a little bit more cooled off. And we also see them dropping shorts from 109,000 to 98,000. So that causes long exposure to increase by 1 point from 65 to 66%, and net positions slowly decrease. What does that mean for gold? Well, we're falling short of hitting this area of demand, and price is stalling. So, this chart really congested and just not clear at all. The sentiment is got a slight bear sentiment here with 66% exposure to the long side, considering previous positions, and the fact that we have this here, red, aggressive, shorts still aggressive. So I think there is the possibility of a larger drop, but we can't suspect that that's going to happen, or expect that to happen, I should say, simply because of the technicals. I'm thinking that what we're going to be seeing in the euro is a big drop, so that could push price down here, and this would support that fact. But there's nothing really tradable here. So slight bias to the downside, but that's pretty much it. A lot of roadblocks, so there's no shorting opportunities to take on this one. Alright, oil. We see 849, 838, 815, 804, 772, 750. So the last 1, 2, 3, 4, 5 weeks dropping long positions. And that was leading up to this weekly supply imbalance. So I was mentioning that there's a very good opportunity, or a very good chance, that we see a drop from this area here, and that's exactly what we ended up seeing. Okay, and this was all leading up towards that area being hit, so it was giving us a good inclination that this was going to happen. And you match that up with a really nice supply area, and that's what you got. So long exposure increases by 1%, but again, look, 849, 121. A small amount of shorts being closed out, very small, about 5,000. But look at longs, 850 to about 750, 100,000. So depending, if you take a look at the sizes here, 100,000, 800,000, that's why it's going up 1%. Okay, because the amount that was closed here and the amount that was closed here equals to long exposure increasing 1 point, even though they're closing off quite a big amount. So you look here, 728,000 net positions down to 633,000 net positions long. So that's the important thing here. It could take some time until we see a bigger drop. That's a possibility. I'm waiting on the daily chart for the right setups to appear to take a short position, if indeed that is what sets up. But it looks like profit taking on longs just based on the data, and we could see a bigger drop to come in the weeks to come. Okay, let's take a look at the US dollar, and here we have increases from 21, 24, 26, 28, 30. So longs are increasing, and what do we see here? 25 increasing shorts just by a little bit. And so net effect is long exposure jumps up to 52%. Still a bearish bias, right? Look at the coloration of the cells, even though we're getting this very strong move to the upside. But look, as price was pushing up, yes, longs are increasing and shorts were decreasing. So we got that big push up. Now we got a little bit higher up here, but I think the gas might be running out here, and we might be able to see a drop here. No strong signs of that happening, except for the fact that shorts are still aggressive, even with longs being larger than shorts. So I think this fact tells us that they're not properly positioned for a much larger move to the upside. So still think that that's a possibility. Okay, all right, let's go to the Aussie. And long positions were aggressive at 72,000. They got dropped down to 56, and that comes as price was consolidating here at that weekly area of demand. So price was consolidating, and they closed a bunch of their longs. Interesting, right? Because we are seeing a very good possibility that we see a drop like this, and we see that shorts remain aggressive, which holds true to a move to the downside like this, and shorts percentages increase. Okay, short exposure increases from 57 to 58, and we're still net positions in the negative, so that's good. So what we're seeing here is that the institutions could very likely be preparing for a larger drop on Aussie. I mean, the technicals sure say that that's a good possibility, and the data is also supporting that. So let's go to the US CAD. Longs have been decreasing from 57 to 54 down to 49 as price was just about to move up. And what happened here? They reduced their shorts. They had 33, 30, 23. Shorts are now very cooled off. So sentiment becomes even more bullish. I've been saying for quite some time I'm expecting a move like this. And so this all supports that move. Bullish, bullish, bullish. Even though we're getting a few positions being taken off on longs, I still think it supports that move. So everything's looking good for the US CAD move to the upside. Euro, just like the US dollar, same thing here. So we had 226 down to 219, back up to 225. Okay, and that comes as price was dropping on the weekly chart. And if we take a look here at the shorts, they increased shorts from 104 to 116, causing the price to drop, right? So long exposures were dropped from 68% to 66, and net positions is still very, very positive here. So they don't seem to be properly positioned for a big move. Can it happen? Like I said, you know, they'd have to start increasing their short exposure quite dramatically. Okay, over the last few weeks, what do we see? 100, 106, 104, 116. So shorts increasing to a certain extent, not bad, but 66% of their overall exposure is still geared to the long side. Sentiment still bullish. So that leads me to believe that there is still a very good chance that we see a move like this to the upside. Okay, if not, it'll be a little bit surprising. It's possible, but do they really want to be holding this many positions long, being so aggressive, and drop price all the way down? If they're gonna hedge by adding a lot of shorts, then that's a possibility, but hedging along from this high up is not typically what I see the institutions do. So it'll be interesting to see how things flow from here. I still believe that there's a good chance we see that push to the upside. Okay, US Swiss franc, what do we see here? We see that longs are aggressive. That's good. That comes as price was consolidating here at that tested weekly area of supply. But take a look. Over the last few weeks, shorts have become aggressive. Why is that? Are we expecting a move down? I think so. Long exposure remains at 71% bullish, and the figures here are starting to become a little bit more aggressive to the upside. So I think that supports a move to the downside, and then eventually a larger move up. That's what I see here based on the data. But we'll see how things unfold. Pound US dollar, we see that longs used to be aggressive, not as much, as they dropped down to 56,000 positions. But shorts are still very cooled off. And this came as price was consolidating here on the weekly, and long exposure jumps up 1 point, and net position still a little bit bullish. So shorts being cooled off, longs being aggressive tells me once again I think there's a good chance here. I mean, it's clear on the monthly chart that price is going to go down, but with long positions being somewhat aggressive, are they going to just hold it on the way down? again, we'd have to see them increasing shorts quite aggressively as that hedge for that push down. Otherwise, I would assume that they're going to push price up. But we'll wait and see, because right now there hasn't been any clear setups for me to take, so we move on. US dollar Japanese yen. This one longs increase from 61 to 76, and that comes as price was rallying straight into that trend line. I've been expecting a push to the downside, and we have received that push, and with that push comes aggressive move short. So that supports that move to the downside. It supports a move to the downside on the US dollar as well. 51% long exposure increases, but take a look. Remember, this is the thing here. Shorts are aggressive, okay, based on previous positions. So a further decline is what I am expecting. Last but not least, Kiwi dollar. And so the longs were aggressive, but they've become less, and now shorts are becoming aggressive, but that was coming as price got to its lows, which is typical of what we see. I'm expecting a move to the upside here, and I think we've already started to get that, and I've been mentioning that for the last couple of weeks. And so longs being increased again would probably be likely, but I think the force of price is going to push price even lower. So watching to see this aggressiveness on the shorts build slowly. We can see that they've just entered into negative territory with net positions, which is good to support this larger move to the downside. They could slowly start building up a short position. So building up shorts, they could also be adding longs as price comes up here in preparation for that drop like this. Okay, guys, that's your CFTC report, and hope you use it to make some good trading decisions. And until next time, take care.